Okay, so this is Solana on the daily time frame. I will try to make this video very short. I was saying on TikTok that we've seen the same thing repeat on Solana. Yes, we saw Solana come to this Fibonacci level right here, the 0.618, and move to the upside. That move was a 48% move to the upside. And as I usually say, at the 0.236, that is where you should be de-risking yourself. Now, de-risking does not mean that you take all your profits or something like that. It only means that if you were in a risky position, you should be de-risking yourself around here. Maybe you should leave like 10 or 20% of the trade to run, but most of your profits should be taken here because there is a high likelihood that price will come back to the downside. Now note that these are always associated with some confluences, yeah, so in some situations you may actually be on the idea that it goes higher. We had the same thing happen again here at the 0.786 Fibonacci level. We had a bounce right here at the golden pocket and then a move to the upside. Now what we know on this channel, which I've been saying for a very long time, is when you see a double bottom like so and you see somewhat of an impulse, wait for a retracement to the 0.618 and a move back up to the 0.236. You could also want to catch this thing at the 0.786 Fibonacci level right here, which is better because the stop loss is the same for the 0.618. You could also want to catch it here and then another move to the upside. This is easy to say, yes, but you should know that it means the exact same thing on an inverted chart. What do I mean by that? This is Solana, yes, and we see that we should have been buying around here or buying around here for an impulse to the upside. Or if we missed this impulse, then we should buy a retracement of the Fibonacci levels. The best Fibonacci levels that I use, which you guys know, is a retracement to either the 0.618 or a retracement to the 0.786, depending on the confluences that we have. This is Solana. So if I had the idea that BTC will retrace to say 26,000 and go to say, for example, 28,000, and at the time when BTC is at 26,000, Solana is say at the golden pocket, then I will be on the idea that Solana will take off from that golden pocket. So it all depends on the confluences that I find. Now, this is also true for the inverted chart as well. When it comes up to the 0.618 or the golden pocket, I should be selling. When it goes up to the 0.786, I should be selling as well. When it goes up to the 0.786 right here, I should be selling. When it comes down to the 0.236, perhaps I should be buying. I say perhaps because the 0.236 is where you de-risk yourself. Most of the times price will not stop there. Okay, so that's the theory. Now let's go to BTC. Let's go to BTC and you will see why I am saying that this thing may actually come back to the downside. Okay, so we've seen the move that we were expecting yesterday, yes? We've seen the move which we were saying yesterday that this thing will go up to the upside and then come back to the downside. Now, I just dropped this in my Discord and Telegram. If you are not in the Discord and Telegram, join the groups. If you cannot join the Discord where we talk and stuff, join the Telegram channel at least. That way I can send you these forecasts when I'm not able to make a YouTube video. Please join those groups. You don't really need to join the premium group. You only join the premium group if you want more information and trade signals with entries, take profits and stop losses. That's why you would want to join the premium group. And of course I would favor your questions there more. So if you ask me a question from the premium group, I'm more inclined to answer you quicker than I would answer in the general channel. Just normal stuff. Okay, so this is the same thing that we are seeing with Bitcoin now, isn't it? If we invert the chart on BTC, what should you be doing here? What should you be doing at this region, at the 0.786 Fibonacci level? What should you be doing here? You should be buying here. Why? Because it's the 0.786 Fibonacci level. It's the institutional price. Institutions are under the idea that this thing is going to go up. So they want to buy cheap. They push the price down, which in this case is pushing the price up. They push the price down so that they can buy cheap. They sell off here, yes, and come here, push price up, retail gets involved, they sell off, retail starts to sell. What will institutions do at this particular price? What will institutions do around here? They start to accumulate their bags as price will go to the upside. Simple stuff. We are all okay with it, yes? Okay, so institutions will want to buy at this point. Does it mean that it cannot go lower? No, it can. It can very well go low. But from this particular point, what are we supposed to do right here? We are supposed to be buying. We are supposed to be buying because that's the institutional price. Yeah? And when we buy, our anticipation is to sell as it goes up here. Remember, this is an inverted chart. So the inverted chart means that going up like so actually is going down on the regular chart. So it's actually going down. Now on the regular chart, what are we supposed to be doing here? We are supposed to be selling here. Again, does it mean that it cannot just go like so? No. Of course, sometimes it will just disobey this thing and go. I mean, it's not all the times that you will have it like that, but you have to stick to the strategy and you have to look for more confluences as price happens, yeah? So that is exactly what we are looking at right here, ladies and gentlemen. We have to buy each time we have some sort of W formation, like so, 1 and 2, impulse to the upside, retracement to golden pocket, impulse again, institutions sell to retail right here as they get excited, and then, which in this case they are actually, yes, they are actually buying from retail because this right here is 25.1, yeah, around 24.9. Actually, they're actually buying from retail because that's on the regular chart. They're actually buying from retail right here as retail gets scared. Yeah, now they buy from retail and they push price up. Retail gets excited. The sell to retail bring price back down here as retail starts to think that, oh, this thing is just going to plummet. No, they buy from retail and push price back up again right here. Yes, now retail is very excited here. They start to say things like $47,000 BTC, BTC is going back to 50K, oh, welcome to Pumptober. What are the institutions doing? No, they are buying from retail, which in the true sense of it, they are actually selling to retail because this is the inverted chart. At this particular point, they are selling to retail. So let's look at it from the regular chart. They are selling to retail around here. Now, this is, I'm explaining what the psychology of the move is to you. Yeah, I'm explaining the psychology of the move. I'm not saying that that's exactly what is happening here or it must do like so because I cannot give you any guarantee. Yeah, I really cannot. There is no magic formula. I'm just explaining to you what Fibonacci is telling us, what we are supposed to understand from price action. Yesterday, I was telling you here that we are looking at some type of AB equals to CD pattern. Now, the principle of AB equals to CD is that the movement from this A right here, the time taken for price to leave from A to B is about the same time that price will take from C to D. Yeah, somewhere around here. Now, I'm just giving you an example. I'm not saying that that's the exact point. So now we have something that looks like so. So how do we put that accurately? To bring that accurately, let's go to the, yes, we are on the daily time frame. Let's take that out. Come back like so. Okay, so we take from here, from this candle wick right here. With this AB equals to CD stuff, we are taking from the candle wicks. We're not using the bodies. Now, we put that right here. Yeah, we put that right here on this particular candle wick right here. Yes. Now, it is pointing us to the 3rd of October. which means this thing could go to this particular region on the 3rd of October, which will be tomorrow. So that's exactly what price is telling us here, ladies and gentlemen, that this thing could go right here. And if the strategy holds true, therefore at this particular point, according to Fibonacci, now note that this AB equals to CD is harmonics, and we are using Fibonacci. The two of them are telling us that this could very well be the top. This particular point where everybody is now excited for Pumptober, saying that, oh, okay, this thing is just going to continue up. Welcome to Pumptober. Fibonacci and harmonics are telling us that, hey, watch out. Watch out. This could very well be the top of this move to the upside. As explained yesterday, there were a lot of people who also bought right here and then price plummeted. So those people will sell off. This is guaranteed. They will sell off whether price continues to go up or not. Those people that bought here will sell off. That also gives us another confluence that we should be watchful of this particular zone right here, the $28,640. You can say give or take, maybe it comes right up to maybe 28.9, because yesterday I was telling you about this particular candle. I told you about this particular candle that we did not have any type of retracement of this candle. So don't be surprised if you see a move that extends into this candle right here. This rejection right here, as you can see, is a very bad one actually, and I would like to see that price does not close a daily candle above this 0.618. So if price can close below this daily candle, that's below the $28,114 region, that will continue to add to the confluences that we need, that this thing is going to plummet. But even if it closes below or above this 0.618 region, I will still like to see price go up tomorrow. I would like to see price shoot up like so, and everybody becomes very excited again. And then when it retraces to the downside, they'll be like, oh, it's finally just retracing for us to have the mega move to the upside. And yes, we could very well have that mega move. We're not saying that these things are not possible. We're just being very objective with our analysis here. We are being very, very objective, that if we are buying at the 0.786 or the 0.618 after an impulse move to the upside, therefore on an inverted chart we should be selling as well. Yeah, we should be selling as well. If the theory holds true, then price should plummet from here. That's basically what I wanted to explain to you. Now you might be like, how did I get these Fibonacci levels? Yeah, and I will show you. Go to the weekly time frame. I got them from the weekly time frame like so. On the weekly time frame, you can just take the levels from this particular weekly candle, right here. This is something I have on my live. So if you're watching here on YouTube, yes, this video is only for YouTube. Check the live section of the YouTube channel and you will see my Fibonacci premium class, premium class. There I have a lot of these videos explaining some of these Fibonacci methods. And on the weekly time frame, you will see how price action respects the Fibonacci levels very well. This is how I usually get those crazy entries that are to the exact figure, like exact figure. This is how I get them. I use Fibonacci and they have really improved my trading a lot, like a whole lot. They've improved my accuracy a lot. I really urge you to use Fibonacci and you will be stunned. Honestly, you will be stunned. So on the weekly time frame, just take your Fibonacci tool. This is the Fibonacci tool right here. Fibonacci retracement. Take on the weekly time frame, and you know this channel is Understanding Crypto. We're not here to hear me talk about this thing all day. We're here to learn, all of us. Yeah, so we take from the weekly time frame. When we see a move to the downside, this is something I talked about on the lives. Take your Fibonacci from the top of that candle to the close of that candle. So we are taking Fibonacci. This is the tool we take from this open right here. So we are not using the wicks, we're using the body of the candle, and we put on the close of the candle right here, and according to Fibonacci we want to take a short entry right here at the 0.618. If you invert the chart, it will be the same thing that we usually talk about. On the inverted chart, what are we doing? You see an impulse to the upside. You take your Fibonacci from this level right here, from the bottom of the candle to the top of the candle, and you want to take an entry where? At the 0.618 right here. And then you are taking profits around here, and you leave some for, in the case where it actually booms to the upside, because some of the times you will see that it will retrace here and absolutely explode to the upside, like triple this entire move to the upside. So we have the retracement right here, which you can see, and you see how pixel perfect that is. You see it, yes? It's not like I'm the only one seeing this here. I'm not crazy, yes? We all see it. It's right in front of us. Okay, so you want to take your entry at the 0.618. Note that this is on the weekly time frame, so they usually take a lot of time for this to happen. After this move to the upside right here, which on the regular chart is actually a move to the downside, you have to wait another week before you can have this move. So that's why I never have any trades and stuff, because I have to wait years to get anything. Well, not really years, but that's just it. So you want to take an entry to buy around here, and if you see another move to the downside at the 0.786 Fibonacci level, you want to buy again right here, which is something we saw with Solana, yes? So we saw that with Solana already. This is the same thing that happened with Solana right here. We see the move to the upside, retracement to the 0.618, another move to the upside, now a retracement to the 0.786 Fibonacci level, and what? Another move to the upside. Let's go to BTC. Let's go back to Mr. BTC. BTC on the weekly time frame. Now I have so many things that I could show you, but I really want to make these videos short. It's already too long actually. So BTC on the weekly time frame, invert the chart and you see the same thing. Move to the upside, come back, retracement to golden pocket, another move to the upside, come back now, and we are at the retracement of the 0.786 Fibonacci level. Does it mean that we cannot just go straight down? No, we can. That's why we have stop losses. And in this case, your stop loss must be below the weekly candle open, which in this case, this will actually be the open because it's the inverted chart, yeah? So on the regular chart, this will be the close of the candle. Now, so here, your stop loss must be here. If you are taking your entry around here, your stop loss must be here, which is why I prefer the 0.786 Fibonacci level, because it gives me a tighter stop loss. So that's basically it. From this level, you want it to go back up. That's what we are seeing right here, ladies and gentlemen. That's exactly what we are seeing right here. Now, when this thing comes back to the downside, where do you think it will most likely bounce from? It will be bouncing at the 0.786 Fibonacci level of this candle. I'm just going to bring this so that you can see clearly what my analysis is. This is where I think we will have Pumptober. If I have time tomorrow, I will do analysis on the dollar. Yeah, so that we can see what the dollar is doing, because it's actually the dollar that will allow us to have this pump to the upside. Thanks so much for watching the video. I hope it was not too long. I will see you in the next video, and until then, stay safe.